Everyone's good, so welcome back to a part 2 of the previous lesson, right? So, in this lesson, coming over here, I just want to speak on some things I didn't touch on last time. So, the last lesson was, covering kind of like top to bottom analysis, starting on the higher time frame, coming to our daily candle, then looking at our, Asia range, then looking at our Judah swing. Now, you see the way I see it, right? We have this one trade, not even a trade, rather the move of the day, right? Pay attention to this last point. When a candle opens, it forms its high. So it'll open, make a high, then go and make the low, then close. Or it will do the other way. This is bearish, this is bullish, right? Now, the thing with this is, between the high and the low, or the low and the high, we have the ADR, or rather the DR, the daily range. How many pips we've moved. And in that area, that space, is where we're catching trades. So why do I like to trade London? Or why do I favour it? If we know London typically makes one of these, either the high or the low, that puts you in a position to get in and catch the move of the day, right? And that's the sort of trade that I'm looking for on a regular basis, on a daily basis. And sometimes if it doesn't come, then I'm happy to sit out, right? Because it will happen. And eventually it will come. And when it comes, it's usually a very nice trade. However, like I said, it doesn't always happen. So when it doesn't always happen, what do? Do we just stop trading? No. Of course, there's other opportunities to get into that move between the high and the low, or the low and the high. London isn't the only session. We've got New York, right? We've also got the London close kill zone, something I haven't introduced to you guys yet. And of course, in between, we also have New York Stock Exchange open. This isn't as relevant unless you trade indexes, so SP 500, US 30, and NAS. So cool. And of course, the ADR is relevant based on the OHLC or the OLHC, because once you know your high or low has been made, as I explained in the last lesson, you can add your ADR to that and make a logical assumption for where the opposite end of the range is. So that can help you with your take profit placement. Lets you know whether it's more favorable to keep looking for longs or shorts, whichever way. And how much of the expansion is potentially left. I'm just thinking about it logically. But let's open the chart. Okay, so looking at my chart, of course, Asia range, London open kill zone, New York kill zone. Cool. Looking at the price action of this day. Nice buy entry offered here if I turn this off, right? Not this one. From this low to this high over here, right? We had our first OT. Cool. From this low to this high, we get another OT. Quite nice, sweep into this fair value gap. But of course, these are during London, right? Now, I caught that second move that day, right, which is quite nice. However, some people may have missed it. When we trade, ideally we should be on the charts, from the start of London and during New York kill zone, right? But of course I understand, people have jobs, school, work, whatever, and we can't all be there for each session at the moment until we're trading full time. When you're trading full time, it's a lot easier, of course. So once we've seen this happen, right, and we've come here and we've recognized, okay, cool, I missed some chances. Okay, fair enough, cool. what can you assume from this chart? No. We had Asia. We swept the low. We also then headed and took the high, right? Now, this is where your high time frame bias is important. Knowing your drawn liquidity, the thing that price is reaching for. Do we want to see price trade higher? We've taken both sides of Asia, so Asia isn't really a indicator in a way now. It's not really indicating, it's not telling us, what we could potentially target. So are we going to trade higher? Are we going to trade lower? Right? So, let's frame this. And bring your attention over here. Pay attention to this area of price action. Cool. So now we understand, right? This is New York kill zone. Coming into New York kill zone, we've had, this strong displacement downwards. We've actually come lower. We formed a downtrend. There was a market structure shift on a lower time frame. Now, as we're trading lower and we have this, clear downtrend here, there was only one evident trading possibility. So this high to this low over here, right? And of course, price came OTE. I had this specific order block marked. I paper traded this short on the day. I think it may have been sent into a group chat. I don't recall now, but cool. Price, of course, was, contracting here, or rather retracing. And we could have, taken this short from here. We could have targeted this low, right? Or to be safe, target these equal lows into this imbalance. That would have been quite nice. Cool. Now, you see, on this day, I sent something to the group chat. So let me go ahead and find where it is. First of all, let's delete this for 1 second. Now, this is important, right? I draw this to there, and we've swept the low. So what have I taught you guys this is, right? We ran the highs over here, of course. Then we go ahead and run a low. Market structure shift, right? In technicality, yes, you're correct. It is a market structure shift. However, we have these equal highs, right? Realistically, I'd expect the equal highs to get run. However, there's a very, very tiny difference in these. The green candle is actually just, a tiny bit higher. In actuality, there's still equal highs in my eyes, right? And honestly, I did expect them to get run. However, right, this was actually a lower time frame rejection block. I believe on the 3 minute. Price trades up here has a very strong, rejection. So just looking at this, right? If I just turn this off, just purely looking at this, price comes to deep premium, has this heavy rejection. What do you guys think? It's going to head for this low, right? These equal lows now. See, I put this in the group chat. I said, don't get caught offside. EU ran the low, but DXY has not run the high, right? So we need to always pay attention to DXY. So cool. So where am I going with this, right? The title of the slide was things to consider, right? So literally, this is something you need to consider. You always need your DXY in play when you're trading intraday on EU and GU. It's very important because it will dictate direction. Now, another thing that we mentioned, right, was the London close kill zone. So when is the London close kill zone? So New York kill zone is 12 to 3. 12 to 3. The London close kill zone is from here, right, 3 to 5. So somewhere roughly here. About here? Yeah, roughly here. Now, this is very interesting. Let's just mark it. I'm purely just drawing this so it's, it's easier for you guys to visualize. Cool. So this blue box is meant to represent the London closed kill zone. So what happened here? We have this initial consolidation, right? And we've built this trend line, correct? We've also come and swept liquidity and reversed. Now what is that? Market maker buy model, right? In this scenario, this is my consolidation. However, I'd consider this as a target. These equal highs, they're just sitting there waiting to be taken. Now let's come to the DXY. What did the DXY have? This consolidation, right? So what can we target? The bottom of this consolidation. Now let's turn this on. And we know that London closed kill zone is, from here to about here. This candle. Of course, during the London closed kill zone is when the market maker sell model is completed. So where am I going with this? It is a bullish day. However, New York didn't actually offer a lot of expansion. As you can see, London made the move here. Then we retraced, and we made a little bit of a move higher, but not a massive move, right? Nothing great. All New York mainly did was just retrace, came back down. What is this sweep? I know this is a smart money reversal. I've taught this to you guys. It's a market maker buy model. But what is this sweep? What's another word for this? Offset accumulation. We took, the liquidity and delivered to the other side. We took the sell stops under this low, delivered to the other side, right? And of course, the framework, the market maker sell model was matching on the DXY, clear consolidation. And as you guys can see, this displacement, very strong move down. Very, very nice, strong move down. And I traded this, right? It gave opportunities to get in, especially on the lower time frame. There were, a couple imbalances. Again, I believe on the 3 minute. Typically, I don't like to go under the 5 minute, but given the framework, I was, confident. And 2, there weren't actually great entries on the 5 minute itself. Or at least not from what I could see that day. So there's a lot of factors to consider here, right? Because everything I said is contextual, of course. Understanding that New York didn't add to the expansion, that from this low to this high would be a very small ADR compared to what, EU's been putting on for the last few days. So we'd consider a bit abnormal. On top of that, understanding that the draw for price was a bit higher, the higher time frame draw where price was headed to. There was a daily imbalance. And of course, price did actually deliver to that daily imbalance finally and offer, this very nice displacement away. Taking all of that context in, I was able to, be very, very confident in this market maker buy model and trade it. I only held it to here, I don't feel the need to hold it, higher. Potentially could have, but even entry from down here to there, that's good. Even 1, 2 of this in London closed kill zone, because typically I don't like to trade London closed kill zone. I'd rather just stick to the 2 kill zones, less stressful, short trading there. Especially if you secured some already, it's fine. Now, the thing is, think about everything I've said to you guys. This might sound like, I know I said this is contextual and it might sound like, oh, this is just one example, right? But what I want you guys to understand from this is, especially from the last lesson, what have I done? I gave you my whole plan, starting weekly, daily, blah, blah, blah. I've shown you how I figure out that context first, how I find that context for every individual day. And then What's another very important thing, right? Knowing that each of these sessions is a data point. We look at Asia. How big is the range? What did the range actually do? Did it actually deliver to something? What did London do? Right? What has New York done? What this does can help you decipher what this may do. What this does can give you expectations for what this may do. And of course, what this does and other given context may also allow you to trade the London close kill zone. Now, since this is my first time introducing it, when I do trade it, when I see opportunities, I'm going to let you guys know in the chat. Otherwise, I'd mainly stay away for now until you become confident and you test it and you get to grips with it. It's not something that's scary, but you just don't want to overcomplicate things until you can properly get the hang of them. So this lesson wasn't as intense on making a checklist. It was more just showing you guys how to apply a lot of the things and adding in a few more, and especially with ADR, how dynamic it is used for profit taking and also understanding where the candle is. Now OHLC, OLHC, the last thing I want to leave with, I just spoke to you guys about all of that context stuff and blah blah blah. Always look at this. Literally, you can be in the middle of London, just go check your daily candle. Just switch the daily chart, look at your daily candle, what's it doing? Where has it been already? That should be very, very telling. And if you really think about it, it will support your thesis, if it's a bullish or a bearish day, which way London's gone. What did the daily candle actually do? Has it swept the previous day high, previous day low? Has it gone into a fair value gap? Do the same with your 4 hour, right? Consider these things top down. It's very important. That's it for today's lesson. Of course, as usual, guys, any questions, please hit me up. And once again, apologies for the delay in lessons, but trust me, November time, I'm going to be pushing out a lot more and I'll make up for everything.